Hi everyone, so sorry about that. We had a little bit of a Wi-Fi snafu. So I kind of want to just quickly recap in case we lost you, in case you didn't hear anything that we said before we realized that we were disconnected. So welcome to Busting Common Myths About Credit. Nikki Wetzel, Director of Communications and Advancement here at Prosperity Connection. I'm with Heather and Sasha. Heather is our St. Louis Builds Credit Coordinator, and Sasha is one of our lead financial coaches, both experts on all things credit. So that's what we're talking about today, hoping to bust some of those common myths that we hear a lot, because we know there's a lot of information and misinformation out about there. We had only gotten through a couple questions, so just a really quick recap. The first question we talked about was things that do or don't build our credit. A lot of times we get questions about, like, well, surely my utilities build credit, or surely this does or does not. So let's high level real quick maybe readdress that just in case.
So debit cards do not, as Sasha mentioned earlier, they're hooked to your checking account. Also utilities, cell phone bills, like Netflix, subscriptions like that do not help build credit.
Okay. And if it's bad though, like if you miss payments, yes, they will hurt your credit. Literally only thing is like loans, credit cards, anything you're borrowing for.
Yep. So rent, utilities, debit card, no. Mortgage, credit cards, anything where you've borrowed money, yes. And then the unfortunate piece is that even if utilities don't build our credit, when we miss it, it unfortunately hurts our credit. So that on to the second question then. We were talking about all the different scores that are out there. We know folks may follow Credit Karma, may follow Credit Sesame, may follow something on their bank app, and it may be really confusing to have all of those different scores. What do they mean? Which one should I follow? Which one is the right one?
Heather's gonna take this one. That was really good. You were in the middle of saying.
Oh, okay. As far as credit scores, they're coming at you, Sesame, Karma, your bank, your as far as your credit card statement. I tell people to pick one because it's going to follow the trends, either positive or negative, and that way you kind of get an idea of, okay, it's getting higher, I'm doing good, or okay, it's going lower, I've dropped 10 points, and I tell people don't panic, it's okay.
Yeah, it fluctuates.
Yeah, it fluctuates.
Yeah. So we tend to show folks FICO, though, just so you all know, if you ever come to us for any of our services, we tend to show folks your FICO model, because that is what 90% of lenders use, but the other model out there is Vantage. So most, like Credit Karma, Credit Sesame, those all typically show Vantage, correct?
Even if it says it's using FICO, it may not be using like FICO 8.
Yeah.
It could be using FICO 10, which is just not going to be the same thing.
Yeah, that was something you said, who knows, before we froze or not. Even within FICO, even within Vantage, there are multiple models within each of those formulas. So there's just a wide range. I think there are it's probably not an exaggeration to say thousands of different models of credit scores out there. So love Heather's advice. Pick one and watch it trending, because if this one is trending upwards, all of yours are probably trending upwards. Same with downwards. So, all right.
And don't be surprised if you're following Credit Karma, it's a certain number, and we pull your Equifax, FICO, and it's off. Because they're going to be different.
Yeah. Within Vantage versus FICO, there can be a pretty big disparity. But as long as you follow the one, if Vantage is trending up, FICO will be trending up. Okay, perfect. And I mentioned this at the beginning of the other one. If you have questions, please pop them into the chat. I've got several that I'm going to have them walk through, but we would love to make sure that we're answering what you would like to know. So please pop questions in the chat if you have them. All right, so let's move on to question 3. Let's talk credit monitoring and credit repair, 2 different things. Should I pay for either of them or no?
The short answer is no. Don't pay for them.
Yeah.
The services offered just here at Prosperity Connection can help with the credit repair. I don't really love that word,
Okay.
but helping with, okay, how do I start working on my credit, get it better, or build credit.
Okay.
And then credit monitoring, oh my gosh, I can't say the word, monitoring. That is something you can do yourself. That's something we can help you with. We pull every 6 months here. You can get it for free. Up until the end of this year, you can get your credit report free every week from each bureau.
Okay.
But you can get it free once a year from each bureau after this year. So every 4 months, pull from one and then the other. So then you're kind of keeping an eye on it yourself. It's just wasted money.
Yeah.
I agree with that.
Yeah. So I know that credit repair services are something we see a lot of ads for, but don't feel like you have to go there. We would love to help you with that for free. All right, question 4. Do demographics, age, race, income, anything like that, does any of that affect credit or credit score?
No, absolutely not. And I tell people whenever you get that credit score, if you're trying to take out like a mortgage, they know nothing about you. They're basing your person on that one score, unfortunately. They don't know your story, they don't know your history. So that's why come to Prosperity and we will help you get that score up as high as it needs to be to get a mortgage, get a car loan, refinance, things like that.
Right. So what things do affect credit score?
Sorry. There's about, well, pretty much 5 things that affect
Okay.
your credit
Yeah,
score. Well, especially FICO, because that's a big thing, FICO versus Vantage, because they take different things into consideration. But for FICO, the top 5 things are on-time payments, so you have to have something you're paying on every month on time. When I say on time, that's within 30 days of the due date. If you're 30 days late, that's what it's counted as late payment. The second most important thing is credit utilization. So you have to have a credit card in order to have credit utilization, but you don't want to be using a lot of your limits. So,
Okay.
and the other 3 things are just how long your history's been building, how many inquiries you have, and your mix, like installment versus revolving. Yeah.
What's an example of installment versus revolving?
So installment would be you would take out a loan like a car note, you have the same payment every month, and then when it's paid off, it's closed.
Okay.
Revolving would be that continuous cycle like a credit card. You got a $500 limit, you can spend up to $500 every month if you don't want to,
Yeah.
but you have that availability.
Okay, perfect. You talked a little bit about credit. Oh, sorry, go ahead.
Go ahead.
You talked a little bit about utilization and not wanting to use all of our limit. Do you have a recommendation for how much we should use or no more than?
1 to 6% is most ideal.
Okay, 1 to 6%.
Now that's a hard ask sometimes.
Yeah.
Literally, I only want you to have a credit card though to build credit. So 1 to 6% is what I want.
Okay.
But you always hear under 30%. I mean, every time you drop the utilization lower, you're entering a different tier for how many points you're getting. So 1 to 6% is the most ideal.
It's most ideal. Okay.
But as far as affecting your credit though, if you're missing, which we talked about,
Yeah.
anything derogatory, if you have collections or charge-offs, thankfully anything under 500 for medical is not reporting anymore, but so that is awesome. Anything derogatory is going to affect your credit up to 7
Okay.
years. Bankruptcy 10, but anything else up to 7 years.
Up to 7 years. Okay, perfect. Speaking of medical debt, we actually had this question come in from the audience. So just give maybe a little bit more detailed total answer. Is medical debt reported on your credit reports?
Anything over 500.
Anything over 500? Okay.
And lenders may not really care about it, so it may not be like, oh my gosh, we have a collection from, but yes, it's reported.
And I will say that each bureau, there's 3 bureaus, they each work independently. That's why you should get copies of all 3 because it may only show up on your TransUnion and not the other 2. So it's good to see medical, they might just turn it over to 1, they might turn it over to all 3.
Okay.
So it's good to know what's on your credit report and to look at all 3 bureaus.
Awesome. All right, couple other audience questions. Is debt consolidation a good or bad thing?
Ooh, that's a big one. No, it's a good one. It just depends. Sometimes yes. If your interest rates are really high and you have a lot of debt and you can get a good one, like loan, installment loan that has a lower interest rate and you're paying it off and you're not going to use the credit cards you're paying off, that's an ideal situation. Wonderful. But that doesn't always play out that way. Usually the interest rate isn't low enough. Usually you don't have the discipline to not use the credit cards when you haven't paid off. Tackling in a debt plan may be the best option, but it's not the worst idea. What do you?
I would say it would be good too if you've got 8 or 9 different payments in different due dates and you're just having trouble struggling instead of, accidentally making a late payment or something. Sometimes it may be good to have all of them in one, but I would say come to us, we can look at what you've got going on and then help you make an educated decision.
Yeah, because the other thing that I feel like I've seen is, unfortunately, sometimes if you're in this space to want to consider a debt consolidation loan, your credit score may not be very high, so the likelihood of getting approved for the amount you would need to consolidate all of your debt and at an interest rate that makes it worth it is really up in the air. So that's why I 100% agree with Heather. I think it's an excellent idea to come to Prosperity first. We can take a look at your debt load and help you really make the best plan for yourself. One more audience question, really great. So I know some landlords can and do rent reporting to the credit bureaus. Should I ask my landlord if they do?
Definitely 100%, yeah.
Okay, perfect. All right. I think the only other prepared question, and I think you've already addressed this, but maybe we can talk about it a little bit more, because I know credit cards cause a lot of confusion. People have a lot of strong feelings about credit cards. You know, oh, I have one, but I don't ever use it. So let's just talk about, should I actually use my credit card or not? And maybe we can talk a little bit about, address the idea of credit cards being a bad thing.
So what I like to tell people if they're first getting a credit card or they have a credit card, use subscription services. You know, whether you've got Hulu, Netflix, anything like that, you're already paying it out of your debit account, most likely. So put it on your credit card, and you know your payment's gonna be under $20 every month. And that's gonna slowly help you build credit.
Because if you're not using it, then you're not having the on-time payments reported, which we need. You know, it's just not really helping it.
Yeah.
And then you're also not having utilization. There has to be some utilization.
Yeah.
Like I said, 1 to 6.
So having a credit card and not using it at all is
it's
not
just
gonna
not
help.
really doing much. I mean,
Okay.
like, and then also if you're not using it like once every 6 months, they will close it on you, and that's actually going to affect your credit score poorly.
Okay.
Yeah.
Oh, because the like
Inactivity,
yeah, inactivity, and then I know you said one of the pieces of credit score is length of credit history.
Well, that and the fact every time you open or close an account, it just affects your credit.
Okay, awesome.
So I'm gonna say this too, because I get a lot of questions on credit cards, and I've had this credit card for a long time, I don't use it. Keep it open. Use it
Yeah.
once in a while. You know, if you close it, then that's gonna close that 6+ year line of credit.
Well, the length of your credit history is averaged out. So anytime you open something new, you're shorting it, or anytime you close something old, you're shorting it. So, and credit cards are going to be your oldest line of credit because installment loans close. They just do.
They used to.
So if you're looking to close an account, I would close one that you've gotten between this past 6 months to a year. If you've got a long credit history, I would say close the newer ones. Keep those ones that have been older, those are gonna help you.
Okay, perfect. We still have a few minutes, so I may toss some ad-lib questions at you guys. Just a reminder to the audience, please, great questions so far. Hopefully we've answered them well. Feel free to continue chiming in with questions. But y'all made me think of something that I would like for us to talk about, which is credit builder loans and secured credit cards. So if my credit is lower on the poorer end of the scale, lower end of the scale, what are those products that can help me build? Can you explain those two things?
Secured credit. Do you want to? Yeah. Okay. So as far as secured credit cards, they're great. Go to a bank, your credit union. So the only negative thing is you have to have a minimum in advance. It's normally $200, I would say, sometimes $300. Find out, you have to have $200, you put it in that account, they will give you a credit card, and you get to spend, basically you're spending on your own money. It works just like a credit card. And then after 6 months to a year, then they will turn it into an unsecured credit card. You'll get that deposit back. That's how secured credit cards work. And you have to use it. You have to use it at least every month, I would say, small purchases.
Okay.
The credit builder loans, you're not actually, it's called a loan, but you're not getting funds.
Okay.
They usually put up the amount of money of the loan, and it's on hold,
Okay.
untouchable. And you're making a payment every month that goes towards the loan, and that becomes available back. If you don't touch it at the end of the year, usually it's a year term, $600, $500,
Okay.
you'll have that money sitting there.
Okay, so really
So basically,
low
it's
dollars.
just for establishing payment history.
Okay.
It's just for,
So that
It's
would
like
be
building credit and establishing a savings account in one.
Yeah, if you're not touching it every time
Yeah.
it happens to be okay.
okay, and that would be considered an installment loan, right? And then secured
Revolving.
credit card would be revolving. So those two things could help you with your mix. I think I do have one other question, but I'll come back to that one because I want to make sure we answer this great audience question. If I have a tween, should I add them as a user on an existing card, and when is the best age to do that? Or what other ways can I set them up to start with good credit? Good question.
Really good question.
Yes, to authorized user.
Why not?
Why not?
Yes.
Yes, as long as you have under 30% utilization on that credit card, because it will negatively affect them if you're maxing out your credit card. If you don't pay on time, that's gonna create negative history, you don't wanna do that. So as long as you've got positive history, authorized user, I would say I did my son when he was 16, my
Okay.
daughter too.
Okay.
And then as soon as they turn 18, you might as well get a credit builder loan for them if you're not gonna like co-sign a car for them or something. Because if you have an installment loan, you don't need a credit builder. But if they're not going to do anything like that, 18 get a credit building loan.
Awesome. Maybe don't give them the actual card though.
Yeah, exactly.
Make them an authorized user, but let's not give them access to the
Tell
card.
them about it until
Yeah.
they turn 18.
It's like, hey, guess what I did?
Yeah, surprise, now you have great credit. That made me think of something. So I've heard people talk about freezing their child's credits. Can you guys talk about what that is, why that might be a good idea, and how that could help them?
I always say, why not? It's
Okay.
easy to freeze and unfreeze credit, and it keeps us safe. And it's insane. I've seen some 18-year-olds have some bizarre credit reports. So
Yeah.
I mean,
And what does freezing do?
it's free to do.
So someone can't take their information and get a loan or a credit card.
Okay,
It's
so we're
using their
protecting
social
from
media.
new loans
Yeah.
being opened up.
Yes.
Okay. Because unfortunately, kids are one of the most common victims of identity theft, to my understanding. And unfortunately, it's usually a family member perpetuating that, or someone close to the family. So freezing your child's credit can help protect it while you are then also helping build it. Because like Sasha said, we've seen some pretty bizarre things on 18-year-olds' credit reports when they should have never, in theory, been able to take out credit. So. I lost the question I was thinking of. Any last comments about credits? Anything you want people to know before we sign off?
It may seem like really like, oh my goodness, this is a game, I don't know how to play, I don't have any of the rules, but it is doable. We have great tips and great advice to give if you want to come see us.
We also offer classes over Zoom too.
Yeah. Not right now.
Yeah,
Summer we're
summer
doing
break.
these.
And
Yep.
just don't feel bad about not knowing about credit. It's not taught. It's not
Yeah,
widely taught.
no.
So like it's something that took us a long time to get.
I always say we're all credit nerds here because we've learned the hard way.
Yeah.
Yes, truly. My credit
We all
has
have our
been-
own stories, our own experiences, and that's why we are passionate about teaching it to other people.
Yeah, absolutely. Awesome. Well, thank you both. I appreciate it. I hope this was helpful to you all. This will stay on our profile, so you can always come back and watch this video and hear these tips. It is also eventually going to be up on our YouTube. And in 2 weeks, we have a new class about how to unmess up your finances, to put it nicely. But basically, we know that people ask a lot of time, where do I even start? I feel like I've messed up so much. I don't even know how to begin with starting over or getting out of that mess. And so in 2 weeks, that's what we're going to kind of talk about is some of the different areas that we might have taken a tumble in our personal finances and how we can come back from that. So 2 weeks, same time, 12:15, right here on Facebook Live. And I hope we will see you then. Thank you all so much for joining.
Bye.